Two of the biggest companies in the industry are coming together. Let's talk about it on Today in Mortgages. Hey, what is up, Dreammakers? Welcome back to the show. We're talking about what's real, what's hype, and what you should actually be paying attention to out there in the world of mortgage and real estate news. It's Today in Mortgage. Rich, big news in the industry today. But first, before we get to that, what's news with you?
Hey, man, it's springtime. Spring buying season. Everybody's happy. Everybody's looking for homes. Feels good.
All right, Rich. Well, I guess this came out yesterday, so I guess we cannot consider it an April Fool's joke. But the headline here that you sent me from bankrate.com says two major mortgage players to merge. What should borrowers know? Rich, who are these two big players we're talking about today?
Well, you've got Rocket companies. So if anybody knows the commercials, Rocket Mortgage and Mr. Cooper. Now, keep in mind, Rocket companies just bought Redfin.
Right.
I mean, it's not long ago, weeks, and now they buy a very large servicer. So, that services 2.1 trillion in mortgages.
Wow.
So this is a land capture for Rocket companies is what's happened.
Rich, I mean, most people out there will be familiar with this, but tell me a little bit about Rocket companies. You just mentioned Redfin. Obviously, there's a strategic play on the real estate side there. And then with Mr. Cooper, you just said that is a lot of servicing. Tell us what that vertical looks like in the integration and what Rocket hopes to achieve out of this.
This is a big move in our industry. Now, keep in mind, our industry is very fragmented. We've got a dozen very, very large mortgage companies. And then we have hundreds of companies like Network Funding. So the idea with Rocket companies and what they're doing with Redfin, the real estate company, and now with the servicing company, Mr. Cooper, they're trying to roll out an end-to-end experience for a home buyer, which means, if I'm a local real estate and I don't work for Redfin, Rocket doesn't care about me. If they want, listen, we're in a economy of convenience right now. Ever since COVID, it really changed. I mean, we're ordering food to the house. We're getting our groceries delivered to the house. Convenience is a major factor today. And convenience is never less expensive, Michael. It's never less expensive. So this play is giving Rocket the ability to capture the client initially. Think about what they do with their Rocket Money app. That's not there to help you. Yes, of course, it's got some benefits to you to help manage your finances. That's there for Rocket. That's there so they know your finances, so they know how to pitch a mortgage to you or a refinance or a cash out loan. You're giving them your data. You are the bait. So that's what these little ancillary systems are within their ecosystem. It's all about capturing you, not giving you the ability to choose your real estate agent, limiting options in the mortgage side because they do 5 or 6% of all originations nationally. So this is them putting a client in their ecosystem, and it's hard for that client to get out. Keep in mind, they're going to find you the real estate, they're going to give you the mortgage, and then they're going to service your loan. They're going to constantly attack and market for refinance and cash out opportunities, second home opportunities. They want you in that ecosystem because that would make you, the borrower, the client, a client for life for them. That's their play.
Yeah, it's definitely an interesting way that they've kind of set up this vertical integration. I mean, just a kind of primer on this, obviously Rocket was one of the first to market on kind of the digital loan, and it comes from Quicken Loans. And now they've got, like you mentioned, Rocket Money, great tools on there to help you maybe cancel subscriptions, monitor your spending and that kind of thing. But like you said, that's just giving your data to this company for free that they want to turn around and basically sell you these products, which could be good for consumers to be able to have access to those things, but at the same time, decreases your likelihood that you're going to go and shop that around. And it looks like that's what they're looking for here, Rich. In the industry in mortgage, there is definitely laws and regulations around things like funneling your people into direct relationships with preferred referral partners and real estate agents and that kind of thing. Like we have to give our borrowers choice legally. Rich, what are some of the complications that come up with this integration for Rocket companies, and how are they getting around that?
Well, there's not. I mean, it's not like you're locking. I don't know how this is going to work out when it's all said and done with them, but it's not like you're the borrower's voluntarily committing to the entire, roadmap that they're offering, finding you the agent, giving you the mortgage and servicing your loan. It's not something you have to do. It's a convenience, kind of one-stop shop. We're going to get it all to you. Does that mean you're going to be working with the best real estate agents in your neighborhood? Probably not. Does it mean you're going to get the most competitive mortgage? Probably not. Do you think a giant conglomerate servicing your loan is going to be a great experience for you? Probably not. So that's just our experience in the industry, or for mine over the last 30 years. People have to be accountable. You got one company accountable to anything, to everything. It just seems a little scary to me. I would rather be working with the best pro real estate agent in the market, the best pro mortgage person in the market, and you're going to get a better experience. You're going to save money. It's just the way it goes. Convenience comes at a giant expense. And this is what they're hoping, that this process would be so convenient for you that you would pay more for a property, because likely, Redfin owns properties. They want you in that ecosystem so that it's more expensive, you know, to get out.
Rich, that's super interesting. Obviously, there may be some regulatory hurdles here. Where in the acquisition process is this deal? Is there going to be any sort of pushback regulation wise on making this happen? Or do you feel like this is a done deal?
No, no, nothing's a done deal. I mean, there's still a lot of research that needs to be done. They're clearly going to have to make their pitch. They don't anticipate this being a done deal. Now, keep in mind, they just bought Redfin three weeks ago. They've spent billions of dollars in just a 3 to 4 week period buying up these two large companies. So it's going to take a while. You're talking about different cultures, right? Three different companies: Redfin, Mr. Cooper, Rocket companies. And Rocket companies, you can be argued at multiple companies within there. So you're going to have to blend all of these cultures and people and teams. That is going to be a challenge. It's going to be a train wreck for a while until it's not. I mean, this is a very large strategic bet for Rocket companies, and we'll see how it works out. But they don't anticipate it even being close till the end of the year of 2025.
Rich, and this is definitely not the first time we've seen attempts like this to kind of do this vertical integration. Obviously, we have things like Compass and maybe real estate agents trying to get into mortgages and title insurance and that kind of thing. And they never seem to work out that great. It's just not a great experience for the customer at the end because, Rich, it does take a professional mortgage loan officer to be able to navigate people through the today's market in a successful way. And I think that is what we focus on here at Network Funding. So, Rich, can you speak to that and what the importance is of being a pro at what you do, uh, and specifically a pro here to help our customers at Network Funding?
Yeah. Well, when you work, work with a large company, let's say Rocket companies, you're generally not working with the pros. I mean, let's be honest. I mean, it's not like they don't have good people. Of course they do. It's just they're not a pro in your neighborhood. They're not sponsoring the little league teams. They're not doing all the things that a mortgage pro or a real estate pro in a community does. So they are just a large corporation. So if you're interested in working with somebody that has a career in this business and that is accountable to their clients because they are their clients for life, you work with a local person, loan officer, like with Network Funding, and you work with the local referral partners at different real estate companies. I mean, the idea is you have choice. You interview real estate agents and you decide who's the best fit for you, whether that be they got the right character, they got the right, accountabilities, you get to make that selection. It's not hard. It's harder than clicking a button and saying I want to buy a home, and then agents are calling you and you lose choice. Yes, it is a little bit harder than that, but you're getting a better outcome. You're going to get a better experience. You're going to get a better mortgage with better terms. It's just that you need to work with the right partners that make it easy for you.
Yeah,
You don't have to just go to a big corporation thinking that's convenient and easy. It's not. Working with the right people in your community is the most convenient and the easiest, and will be by far the best experience that you have, as opposed to working through some of these behemoth companies.
Yeah, as a consumer, you really want these people fighting for your business, not just handing over, the keys to your finances to just kind of the biggest company that can make it seemingly easy for you. Like you said, that is going to come at a cost to the borrower, to the buyer, ultimately giving them a worse experience, probably with worse results. And if you are a mortgage professional out there looking for a home to hang your hat, we're obviously doing a lot to grow our company right now. Rich, who are the people that we're looking for?
Hey, man, we're looking for entrepreneurial people that don't want to be caught in these ecosystems, that want to be able to run their business the way they run their business. Network Funding is a 27-year-old independent mortgage banker. We know what we're doing. We've got a great name. If you're an originator working for another company and you just don't feel heard, feel lost, you're just a small fish in a big pond, come take a look at Network Funding. I encourage you. I know you will love it. We've got all the best tech and tools and price and products. We've got a great offering here at Network Funding, and we know what we're doing. We have plans.
I love it. And we have Rich Jefferson, who always makes things clear on this podcast. And so I thank you, Rich, for being here, for making me smart. Thanks everyone out there for watching, listening, wherever you are. We appreciate you. And we'll see you next time on Today in Mortgages. Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.